Hi, everyone. It's Sid here from Fundamental Research. And our guest today is Igal Sudman, the CEO of Ayurcann Holdings. Ayurcann is an Ontario-based licensed cannabis extraction company that went public earlier this year. The company is in the business of co-packaging, white labeling, and toll processing of high-purity extracts. They also manufacture oil distillates for Cannabis 2.0 products. Now, one of the things we look for in every company is management's skin in the game. Igal himself owns more than 20% of Ayurcann shares, and so he's very closely aligned with investors. So the agenda for today is I'll kick off the call with our thoughts on the industry and highlight two sectors that we believe will outperform over the next 12 months. And for listeners, you can either wait till the end to ask questions, or if you have questions during the presentation, feel free to type them in and we'll try to respond to them. Here are some key disclaimers. Please take a moment. Okay, so let's get started. Cannabis stocks have underperformed the market this year. As shown on the table, Canadian and US indices, cannabis indices are down 20 to 30% year to date, but still up 10% year over year. Almost all of the major Canadian and US cannabis companies' stocks are down year to date. In terms of sector valuations, you can see from the chart here that valuations are also down significantly. An interesting point in this chart is that there's a valuation gap between US and Canadian players. Canadian companies are trading at a premium, and we believe this is primarily due to the fact that cannabis is yet to be federally legalized in the US. Note that this gap is narrowing as we believe the US is getting closer to legalization. Now, we believe the number one reason for this weak performance this year is declining flower prices. As shown here, prices have been steadily declining over the past 18 months, and this is primarily due to the inventory buildup and oversupply in prior years. We believe growers will continue to face a downward pressure over the next 12 months. However, there are two sectors we really like and believe will outperform over the next 12 months. Number one is Cannabis 2.0. 2.0 includes edibles, beverages, topicals, and extracts. The chart here shows Canadian sales projections. You can see the significant growth projections for oils, edibles, and vapes. Ayurcann provides services and products to businesses operating in the Cannabis 2.0 space. The second area we like is the retail business. This is primarily because we are seeing rising sales of legal cannabis and declining illegal sales. California, the world's largest cannabis market, is expected to see its legal sales more than double in the next 5 years. Illegal sales is expected to decline 25% over the same time period. We believe increasing demand for Cannabis 2.0 products and rising legal sales will result in stronger retail sales. As shown here, Canada's storefront has more than doubled year over year. This table shows population per store count by province. You can see that Ontario is at 13,000, Quebec is at 110,000, BC is at 14,000. This compares to Colorado's 7,000. Colorado is considered to be a mature market in the US, and we expect store counts in Canada to increase to levels seen in mature markets. Based on this, we believe there's room for another 1,500 new stores, at least 1,500 new stores in Canada, up from the current 2,650. In the retail business, one of the best strategies to improve efficiencies and grow is through acquisitions. So we believe well-run small retail chains will be ideal candidates for larger players. With that, I would like to welcome Igal Sudman, the CEO of Ayurcann Holdings. Igal, you'll be able to share your screen in a second.
No problem. Thank you for having me. So I can share it now?
Yes, please.
Perfect. Okay. So thank you for having me. Like I said, Sid, very excited about presenting some more information about Ayurcann, specifically how we integrate into the cannabis ecosystem in Canada. I'm going to go through it's a big presentation. I'll go through quickly on the main points of what we do here. So at a glance, we come to market as a debt-free company. Like Sid was mentioning, myself, my partner, and family and friends have a major shareholder, shareholding in the company. We have about 50 to 60% of the company as it is now. We entrenched in it for the long term. We were locked up, obviously, as the regulations call for. And the intention is obviously to grow value as we move forward. As Sid was mentioning, the cannabis 2.0 market in Canada is growing. It is expecting to grow quite substantially with a focus on the cannabis 2.0 products, and that's specifically where we are integrated. So Ayurcann, value chain, and what we do here, we don't touch cultivation, so we don't touch the flower, which is a commodity based. It's really the post-harvest solution that we provide to other LPs as well as brands that want to enter the market, specifically when it comes to extraction, formulation, purification, product fulfillment, co-packing, branding, and obviously retail sales. We've been licensed since last year. So this is sort of our first year into production. We're one of the only companies that has come up with financials that are profitable sort of from day one. Like I mentioned, we don't have any debt. We don't intend to have any debt. And with a tight cap table, we build as profitable. So last quarter, we put up financials with about $2.5 million in sales, with about 50% margin, and that's the intention of moving forward as well. We feel that the company that or how we operate, especially in the extraction and processing space, allows for larger margin moving forward. So our key factors of what we do is twofold. One is we do processing and extraction for other LPs, so it's really a B2B model. So any other LP or licensed producer in Canada, doesn't really matter if it's Hexo Canopy or small local growers, they usually need product. So if they're growing, we are able to provide to them extraction services on their flower, or we buy the flower, we extract it, and we have inventory in place that is available for sale. We probably carry 300 to 400 kilograms of oil, be it crude, THC, CBD, or isolate, one of the largest, if not the largest, available inventory in Canada, and ready for sale. Like I said, we have three sort of verticals of what we're offering: extraction and refinement, based on specs that the various licensed producers would need. We also buy on a very large scale. Again, probably extract more than majority of companies in Canada, bar none. Probably 1,000, 1,500 kilos a week of extraction. And being able to do that on a larger scale, we are able to offer very competitive prices when it comes to white label solutions, meaning brands or other LPs that are not able to vertically or haven't been able to vertically integrate are able to source from us not only the oil but also the formulation. We can fill the vapes, tinctures, or topicals for them, send it back to them in bulk if necessary, or with our sales license, we're able to produce product and then offer it to retailers through the board throughout Canada. Like I said, we've started about a year ago, and profitable, sort of from day one. We've been increasing our production capabilities and capacity on an ongoing basis. There's going to be some PR to the fact, and I think we talked about it before, that phase 2 is coming on par over the next couple of weeks to basically double our production capabilities and capacity. Like I said, we have. When it comes to white label manufacturing, especially on the retail segment, we continuously, we probably have, this is a little bit older deck, so probably have about 60 SKUs now with Health Canada. Not all of them obviously available for retail yet, but they are being offered throughout Canada in the various provinces. Some of the SKUs have been being picked up already, so we have already shipped, and there's PR to that effect, into Saskatchewan. We anticipate going into Alberta, Manitoba, Ontario, BC, and New Brunswick over the next couple of months, and expanding the top line revenue both as a white label solution for other LPs as well as for brands that we've signed internationally. These are some of the products that we also have on the medicinal line. As you can appreciate, the cannabis world in Canada is built on the recreational and medicinal side. We have our own Ayurcann marketplace, which is really an Amazon type of model, where we are offering, not only our own products, but also in relationships with other LPs to have the ability to sell their products directly to patients, similar to an Amazon through a drop shipping model. These are some of the products, highest potency probably products at the low value proposition that we bring to market when it comes to tinctures, vapes, and topicals. And we are strategically partnered with different brands. We've signed up with a California brand, award-winning California brand, Green Bee. We've signed with a New York intimates brand. It's called a women's intimates brand called Her Highness. Again, they're selling throughout the different states, but we're exclusive to them here. We also signed with Ayurcann, which is another public company that are concentrating on the IP and the CBD cannabinoid in order to enhance people's lives on the medicinal as well as the beauty side. So we are exclusively manufacturing and distributing for them throughout Canada. These are some of the brands, like I said, that we have signed and we are representing: Green Bee, Bazelet, Vida, Fuego, and a variety of different ones that are continuously signing up with us because we are able to offer an A to Z solution and really truly bring brands to market within weeks instead of months, like other ones, especially from the R&D position. They do get presented into the boards, and usually it takes 3 or 4 months until the boards are accommodating and want to carry new brands onto the shelves. Some of the sales or financial highlights that I know Fundamental has done some research on and presented some papers on. Like I said, this is sort of the last quarter or from when we started, exponential growth and stability, both on the sales as well as the client base moving forward. This is some of the competitive landscape and why we feel that there is a lot of upside to Ayurcann. On the production side, sales-wise, as well as nobody being able to say that they are debt-free and moving forward. We are valued at about $20 million, comparable to MediPharm, Neptune, and Valence. On the production, we on par, if not more, than some of them, and sales are catching up quite quickly. So we feel that the valuation, should be substantially higher than what it is now. This is a picture of our team, myself, obviously, that has been involved with a variety of different businesses, both online and offline, and manufacturing and distribution. My partner that is very strong on the production and as a CEO, and eye to the bottom line as well as the operational strength. We have our quality team in Jasprit and Raj that both have pharmaceutical backgrounds from a QA point of view. Some of the directors that we have public markets experiences in Allison and David that were involved with 48 North from the beginning and help, obviously raise money as well as transact through the legislations and legality of cannabis. And Maor is involved with me, which is an up and coming company that we are closely involved with. He's the CMO there and manages a lot of the operations. We have some of the advisory board, again, very experienced people in the cannabis world as well as the business world. You can see Michael Ashbury. Trina is a known lawyer for when it comes to operations in Canada and legalities. We have Iris, which is the CEO of Ayurcann. It's about $200 million company now that we're exclusively working with. Casey is the founder of Budtender, so any retail sales she can help with because she has in her association as the CEO, she has access to about 2,000 Budtenders throughout Canada, coast to coast. So if we have new products that are being introduced, she can help mitigate that. And Ben, has been involved with esports and more of the up and coming millennium type of businesses and opportunities. And then when it comes to brands out of the US specifically that want to come into Canada, there's a lot of introductions that can be made. This is sort of the disclaimer, and that's about us.
Thank you so much, Igal. We can now open the call to a Q&A. Listeners, if you have any questions, please feel free to type them in, or you can click on the raise hand option and I can unmute you. So Igal, again, thank you for your insights. Three things that really stood out for us when we did due diligence on Ayurcann. Number one, as I mentioned earlier, was management skin in the game. Number two is that we noticed that very few companies in the space are EBITDA positive in the first year of operations. And number three is the valuation side. In terms of comparables valuation, based on our 2022 revenue estimates, we believe Ayurcann is trading at 1.4 times revenue. The sector average is 4.8 times. So Ayurcann is trading significantly below its comparables. So, Igal, do you mind giving listeners an idea of the landscape of the sector when it comes to extraction and refinement business? Is it dominated by smaller players, larger players? Is it highly fragmented? Just to give more, if you can provide more color on the sector, that'll be great.
Perfect. Yeah. So when it comes to extraction, processing, white label, they tend to be focused into one area or one segment and grouped together. From the public markets point of view, there is specifically Valens that is more of a larger player, out of BC. As a comparable, they're doing their valuation is about $500 million compared to us at 20 million. When it comes to specific extractions or white label solution that we are able to provide is on par. And we are concentrating on the B2B segment, really. They are moving more towards the retail side as well as the US expansion. The other company that has been, involved in the industry was Medifarm, that, is now concentrating internationally as well as concentrating on the pharma grade product. When it comes to product development or manufacturing, we on par, we're able to do all the pharma grade material and ingredients as both Medifarm and Valens can do, or any other larger companies. We sort of feel that we are valued less, but we act and work and produce as much, if not more, than some of these majors that our valuations are substantially higher. There aren't any other ones that are come to par that are pure play processing, co-manufacturing. All the other ones are like, if we would put ourselves in the mid tier, all the other ones are really trying to be vertically integrated, meaning growing, extraction and sales. And, even though valuations are, in the hundreds of millions, if not in the billions, eventually they need extraction and they need processing, and they usually send out their work, and that's the expectations moving forward.
Great. Igal mentioned Valens. Valens is trading at EV to revenue of 5 times versus what I mentioned earlier, Ayurcann is at 1.4 times. Now, the capex for extraction and refinement is not that high. Your margins are pretty good. The question is, why don't LPs and other players have their own extraction refinement capabilities? Why do they outsource this segment of their business?
Yeah, because I think that it's a good question. I mean, a lot of them have tried, and that's sort of the pitch that a lot of them came to market with. But they find that, as the market or the price points, decrease on the value is not there for them. In order for a large cultivator or a larger company to be able to carry a division that only does processing for themselves is not really worth it. They do have to carry the QA, the QC, the manufacturing, the equipment, the space, the licensing, and so forth. And it's not worth it if they're not doing, 24/7 sort of production. It's cheaper and faster and more guaranteed for the bottom line for them to source it out, because if they are able to produce, it's manufacturing. So what happens is that they may, write on paper that they want to produce 100 kilos and their calculation is at, $3,000 or $4,000 a kilo. If they happen to produce 50, now their financials show $8,000 a kilo when they can buy it, at 3.5 or 4.5 with a guaranteed price point, a guaranteed potency, guaranteed quality, and guaranteed time. and none of them are able to do it. It's an input material. The industry is no different than any other industry that is on a large scale, sources things out. If you take the automotive industry, other than Tesla, but they have never made any money. But other than Tesla, if it comes to manufacturing of cars or manufacturing of beverages or manufacturing of whatever, the raw material is sourced one place, the manufacturing of it is usually done in another place, the co-packing and the sales is done in a third place. And it shouldn't be any different in cannabis. And if we are able to provide that service on a large scale, and be only one of 2 or 3 players in the industry, we feel that we have a good strength in what we do and ability to take market share.
Got it. So does that mean that most players will not be vertically integrating their operations? How about extremely the large caps? Do you see a need for them to fully vertically integrate? Or
some may. I mean, that's the reason that Hexo bought Redecan, for example, because Redecan was a large player by itself as a private company and being able to manufacture on their own. And Hexo, with all the money that they raised and the ability that they had and the space that they had, was never able to do it. So, they went out and they bought the production and processing and co-manufacturing and so forth. It's very similar to what, Canopy or Tilray, happens to do with brands, right? Like everybody sort of either buys into or partners up with somebody that can assess, their needs and provide a better solution. I don't think, there may be 1 or 2, I don't know, but, and some of them are manufacturing themselves, but, if there are 700 licenses, if 1 or 2 are vertically integrated, there is business, to take away from the other, 698.
got it. So what I was trying to get at is once Ayurcann expands operations, maybe in a year or 2, will it be an M&A target? If so, who would be likely looking at companies like Ayurcann?
So I think it's the best example that the one that just happened is Hexo with Redecan, obviously with the valuations and production capabilities. I think that there aren't going to be any, to my feeling, there aren't going to be any small players that are public or anything like that. There's going to be medium to large size, and there's going to be some integration. We are looking at some M&As as well. For ourselves in order to grow our capacity and capabilities, both on the medicinal as well as the recreational side and the manufacturing side. So expansion horizontally, I think is what's going to happen. And being able to do that, coming as a large player to a large company is where we want to be. And I think that's also one of the reasons that, Tilray merged and Kronos and those guys are looking for large acquisitions just to have a large impact on the market.
Got it. So just to give the market an idea or a sense of the revenue potential, you recently expanded operations. How will an investor look at that, look at your facilities right now and maybe guesstimate the maximum revenue potential of your existing facility? Can you give some guidance? I know you don't want to give numbers. If you want to, you can, but if you can guide the market on how they can potentially put some numbers on your facilities.
Yeah, so we can't really, talk to that, obviously. So what's happening is that, from a production and processing point of view, and on the chart that I've showed, our capacity, 200,000, 300,000 kilos a year of biomass input is not really an issue. So that's really on par, specifically with Valence or Neptune or, or any of those major players. When it comes to processing, we also are able to do a lot of manufacturing, specifically on the vape filling, the tincture filling, and the topicals. So to give you an example, if somebody wants to, search some of the, Oxley, Valence, anybody that is putting out product, they're usually doing between 100 to 200,000 of fills, I would call. So that's a combination per month. That's a combination of vape filling, tincture filling, topicals, maybe beverages and edibles, and that sort of translates right now in the market. If you look at Valence or Medifarm or Tilray, Oxley, whoever, those can, they're running between $5 and $10 million a month in sales, not including flower, right? So, our capacity is on par with them. So, it's just a matter of getting into the market and into the recreational market and making sales. So, that's to the best of my ability to have a apples to apples comparison.
Got it. So for the viewers of this webinar, we have done a detailed valuation on the Ayurcann cash flow projections and comparables valuation. If you have not seen our report, please make sure you go check it out at our platform, researchfrc.com. The next question I have is, this is a question from one of the attendees, is most of your revenue coming from Canada? What's your exposure to US and obviously and Europe?
Yeah, so all of our revenue is coming from Canada right now. We are not looking at anything into the US because of the, it's basically not illegal, but it's not federally licensed. So that could be strategically employed, but if we go there, it's probably going to be an online type of version where, similar to what High Tide is doing or what Valence bought on the websites that are able to sell CBD or hemp-based product that are federally legal. So if we go there, that's the route that we'll take until it's federally licensed there. When it comes to Europe, we have, like I said, we have good rapport with the companies in Israel. We're starting to have some feeds into Germany specifically because they're very, health oriented when it comes to cannabis oil, and we're able to produce that on a large scale. We've had discussions in Australia as well, Malta, Spain, everywhere that it's legally available, but we haven't done any deals there. We feel that the market, especially on the medicinal side in Europe or worldwide, is still small, but we are able to supply whatever is required. It's just a matter if the price point and the connection is there and being made, and they can afford to buy on a larger scale. We try to work with larger players, not on the R&D side or on a lab scale. We want to make orders that are substantial.
Okay. Your most recent financials, which is Q3 2021, that was the 3 months ended, is it March 31st. Balance sheet was very strong with no debt. Do you have to go back to market raised capital? Any CapEx projected for the next 12 months?
Yeah, we just did a little raise again, to get the right people on board. We feel that because we didn't raise any money and we don't have any debt, previously, the market awareness is not as wide as we hope it to be. So we are interacting with the various IR and PR firms to enhance that. We also, going back to some brokers that wanted to participate previously and haven't had the chance because any raises that we do, we keep an eye on the equity portion and the dilution. So we are not, we're not interested in diluting, our current shareholders as well as ourselves to any large scale. We have money in the bank. We have accounts receivables, low accounts payables. We're a very sustainable business and debt free. So it's going to be very strategic if we do go back and raise any monies. But right now, we don't anticipate doing anything like that.
Just for the attendees here, just some insights is that a business like this with facilities, usually they take on leverage debt. Ayurcann is operating debt free, implying a lower risk tolerance from our perspective. Now, from our view, the upcoming results, Q4 results, ended June 30th, we're going to see record revenue, which I think will be the next major catalyst for Ayurcann shares. But Igal, do you mind telling us a bit more on upcoming news flow or catalyst, and also when do you expect to release your year-end statements?
Yeah, so financials, I think we'll do towards the end of the month as required. We're just going through the auditing statements now. So, that's coming out. Moving forward, I think that there is a variety of different news flows. Like I said, we started to sell, and I think there was a PR to it last week for Saskatchewan that we went into retail there. We expect to have, other POs from them because of the value proposition that we bring to market as hopefully top SKUs. We expect to have news about POs and product being shipped into Ontario, Manitoba, Alberta, and New Brunswick, BC, and so forth. Throughout Canada over the next couple of months. We're very strong or very concentrated on the medicinal portion of the business. So you'll have some news about that as well. About acquiring or participating or partnering up with clinics that have large flow of patients, in the tens of thousands, hopefully, that will be able to support our model and grow that segment. We anticipate and hope to have a substantial portion of the medicinal patients in Canada, coming to us.
Okay, I don't see any more questions, Igal, really appreciate you taking time joining us today and sharing us your plans and also upcoming catalysts for Ayurcann that we all can watch out for. Any closing comments?
No, I'm just looking forward to, like I said, I appreciate taking the time both from you and from the viewers, and looking forward to under promise and over deliver as we have been so far, and moving that way in the future.
Thank you so much, everyone, for taking time today. A recording will be uploaded on our YouTube channel shortly. Please ensure you subscribe to our YouTube channel and also sign up to be a member of our platform, researchfrc.com. You'll get alerts when we publish new reports. And of course, you'll be able to see our list of top picks. Ayurcann is in our list of top picks. Thanks again, and wish you all the best and stay safe.